Hi, I'm Justin Landis, and welcome to the Landis Look, where we take an inside look at the world of real estate. And today, we're going to take a look at something that is new to the world of real estate in the last couple of years, and that's iBuyers. Ever heard of an iBuyer? Wonder what an iBuyer is? We'll break that down today, and we'll see how it's impacting the real estate market and how it might impact you personally. So iBuyers, these are companies, and you may have heard of some of them. Open Door, Knock, OfferPad, and then Zillow's also doing it. Did you know that Zillow's buying houses? They have a program called Zillow Instant Offers. And these are iBuyers. They are using technology. They're using online valuations to figure out how much houses are worth. And then they've raised bukus of money, millions and millions, in some cases over $1 billion, to buy houses, and then they resell them. And so the advantage to the consumer, and you could ask yourself, hey, do you want this? Is the ability to sell your house high convenience, low stress. Because the way the iBuyers work is they'll make you an offer. Sometimes they'll make you an offer within minutes online, oftentimes within days, and you don't have to do anything. So you don't have to fix up the house, you don't have to have any showings, you get to pick the closing date that you want usually. Sometimes they'll even give you some possession of the house after closing. And so that is high on the convenience factor. And I think we could probably all agree at the same price, basically any of us would do that, right? I mean, if the price was exactly the same, why would you not do that versus getting your house ready, getting it in top condition, having people come look at it, going through an offer, maybe a couple offers, and then negotiating on some of the points. But is the price the same? And I think that's probably the big question with it. And I'm going to take a look at that today. I'm going to share with you an example of an actual house that we had listed that we got an offer from one of the iBuyers on. And I'll let you see the numbers, and then we'll see, hey, would this make sense to you? Would you do this and make the trade-off? Because there is a little bit of a trade-off. So here, let's run through the numbers. This is a house that we had listed. It was a newer construction townhouse, so it's in good condition, and it was on the market. And I'll put the columns up here side by side. All right, so we were asking $465,000. It was on the market, and that was the list price, $465K. The iBuyer offered $430. Just not a terrible offer, but definitely not a great offer. They had fees of 7.4%, which came out to $31,820. So these were the total of their fees. So this would take the place of any commissions, of doing any repairs to the house. Now it's a new construction townhouse, so it was already in good condition, and it was already listed, so they already had it prepped and ready for the market. But this was the total fees. So from a net standpoint, the net to the seller was going to be $398,180, just under $400,000. The seller elected not to take this offer and keep it on the market. We ended up getting an offer for the house and getting it under contract at $454,900. So definitely a lot higher than the $430, but we still had to have a home inspection, had to negotiate the repairs. Not a lot of negotiation in this case. Those repairs came out to $350, just a couple of minor things. There were realtor fees. We charged 6%, so that came out to $27,294. And so the net here on the traditional sale was $427,256. So in this case, it was about $30,000. You know, $30,000 to go through the uncertainty, because we didn't have this offer, right? So we didn't have this offer, so we weren't sure exactly what we were going to get. We didn't know what this 350 number was, and we didn't know the timeline on it. It may take a week, it may take months sometimes. So there's definitely some uncertainty here, but this is what we ended up with. And then $398 is what you could have had for pure just convenience and assurance of, hey, I've definitely got this sold, and I know exactly what I'm getting in the day that I'm closing. We've done this on a handful of houses. I've seen them closer than this. We've actually had some where the seller elected to continue down the path, and they did just a little bit better. We've also had them worse, where there was even a bigger spread than this. And so I think one of the things that says to you is, hey, if you're considering this, there's not just the standard of, hey, every time there's going to be a $30,000 spread here. Sometimes it may be the right decision, and sometimes it may not be. Another thing I'll say, this was 7.4% is what they charged here. That's one of the lowest fees that I've seen. A lot of times you'll see this fee even upwards close to 10%. And that does take into account any repairs and commissions, but you got to ask yourself, at 6% commission, are you going to have 4% repairs on your house, that is really uncommon to have that level of repairs and prep. And so, one of the things that I'm always curious about is, hey, are people picking this? So are people in the open market, are they picking to take the convenience route, or are they picking to take the traditional route more often? The answer is a decent amount of people are picking the convenience route, especially in locations where the houses are easy to value. So if you live in Virginia Highlands and you have $1 million house, they're not going to make an offer on your house. Those are super hard to value, and it's really, really hard for an algorithm to come up with a price for your house. Now, if every house was built in 1998 and there are 4 floor plans and they're all basically the same, it's a lot easier for a computer to figure out that. And those are the neighborhoods and locations where it's a lot more prevalent. So in Atlanta, you see this a lot more in the suburbs than you do in town. In some locations, like Phoenix, for example, you see it a lot. Over 10% of the houses that are in this target, they also usually have a price cap, where a lot of times they'll only go up to like $500,000. A lot of the iBuyers will. But in those target markets, like under 500, newer construction, they have gotten in some cities double-digit market share to where 1 out of 10 people are picking this route because it is easy and maybe the spread isn't as much. So that's an overlook at iBuyers. If you're thinking in your situation, you're like, man, I would absolutely love to sell my house without doing anything. Just have one person come look at it, don't have to do any prep, don't have to do any of the showings. First of all, we'd be happy to help you evaluate if this is the right option for you and give you a completely unbiased and accurate opinion on which route we think would be best for you. Secondly, we know investors, if you want to do that would probably offer you more than this, and so you might even be able to get a little bit more and still have all of the same benefits of picking your closing date, not having to get the house ready. So we'd be happy to help you with that. Send us a message or send me an email at Justin Landis Group, and we'd be happy to help walk you through it. I hope you found this interesting. I love all the things that are going on in the real estate market. There's lots of technology, lots of new things, and this is one of the things that's happened over the last couple of years. And I just wanted to give you guys an update on it. We will see you next week. Thanks for listening.